Hey, everybody, this is David Skrika. This is the stock chart of the day from Monday, August 28th. Like I said, we're going to have these every day now. So I'm going to try to mix it up and do different things. So today, what I'm really looking at is we're going to look at 3M. 3M is an interesting company because they've used a lot of financial engineering over the years, which we're going to show you, and it really hasn't worked. Now, the stock only trades at 10 times earnings, but part of the reason is the earnings aren't really going up that much. They've just been buying back shares and, retiring shares. And that can, like for example, if you have 100 million shares outstanding, for example, and you make $100 million, let's just make this easy. That's, $1 per share. Well, if you buy back shares and that goes down to 80 million shares and you still make 100 million, you make 125 a share. That your profit goes up by 25%, even though you're not making any money. And because there's less shares out, less buying can push them higher, all of that sort of thing. So it's basically, it's called financial engineering for a reason, because you're trying to engineer the price higher. And I have no problem with buybacks if companies use them when they're beaten up, they think their own stock is cheap. Like Nvidia did a buyback in the last earnings. What's the point in that? Their stock is up thousands of percent. Nvidia, even if they have more cash on hand now, why not wait for a rainy day and say a next bear market or decline, and when Nvidia stock falls 20, 30, 40, 50%, whatever it is, and then buy back there. And of course, you can buy back more shares because like $1 buys, twice as much at 50 cents as it does at $1, right? So it's just common sense, but it's really done just to engineer the stock prices higher so managements can exercise their their stock options, etc. I'll do a video on it one time, but we'll show you. So this is 3M stock, and we can see after a huge move after the financial crisis, from $30 roughly in late 2008 to almost $200 in 2018. Nvidia is down almost 50% since then, and most stocks are still way above the lows of COVID, and you can see that 3M is actually right at the lows of COVID right now. So it hasn't done anything. And what we can see is that since 2010, and it's funny, the first move upwards in Nvidia stock here in 2010, they didn't even buy back stock. The number of stocks outstanding was going up. But anyhow, we can see they did work for a while. But once things really began to stagnate with the earnings and the revenues, et cetera, Nvidia hasn't worked. So they've gone from 725 billion shares or 25 million shares outstanding, to 550 million outstanding, basically in the last 10 years. And we can see, again, it hasn't really worked. So it just shows you if you're not growing your top line, it doesn't work. Now, Nvidia has decreased debt since 2019. So that's a somewhat of a positive. They're not just borrowing money to buy back shares, but they are doing it out of, cash flow. And like I said, decreasing the number of shares outstanding is not working for 3M. You need growth, etc. And IBM's the same way. I could show you a million stocks like this, the stagnant. Like Skills, a company that I own a little, I have a small position in via stock options. They are down like 99% from their highs, and they announced a stock buyback. Well, that's fine. Now they feel that their shares are cheap enough to buy back. But I don't, and after 1987 crash, a lot of stocks and a lot of companies announced buybacks. Fine. They thought their prices were cheap. So anyhow, I just wanted to show you. So now we're going to show you, continues on Newfoundgold to have stellar news. Stock is up 3% today. Oh, and by the way, the reason I'm showing 3M is the stock is up $5 today, 5%. And I just wanted, that's part of the stock chart of the day. Whenever something has a big move or earnings or just like a big move in general, it's in the news. So, we'll talk about the stock that's in the news. So you can see that just this morning, Newfoundgold had 36 diamond holes, and then and they announced some great results, including 2 meters of 198 grams per ton, a real small, that included a section of almost 1,000 grams per ton. You can see a pretty long hole that had 4.5 grams per ton. So they continue to kind of expand the size and scope of this property. And that's how you really go higher in a bull market. That if your resource goes up higher in price, gold goes up higher in price, it's twofold. Because let's say gold goes up 50% and your resource goes up 50%. Well, then that kind of, it makes it that your stock could go up even more so. And then you factor in, if your cost of production, if you go into into production, is way below where the current gold price is. All of these things play a factor. Now, Newfoundgold is not a cheap stock. It has an over $1 billion market cap. We bought this thing at $1 a share in our pre-IPO. Many of you participated in back in 2021. So this has been one of my best deals because it went to north of $13 a share. I know many people. I have one guy. I don't think he'll mind me saying this. He's a doctor in Chicago. He's basically told me anytime I come to Chicago, the dinner or lunch is on him, so it's always great when you get those kind of emails as well. So, anyhow, that's basically it. The Newfoundgold are some more excellent results. Again, that actually bodes well for another company I raised some money for that I think some of you have done pretty well on, the Palisades, which is, if you want a less expensive, more diversified way to play Newfoundgold, we did this at about $1.40 on a pre-IPO, private financing 2 years ago. It's $2.50. So roughly doubling your money. That's pretty good in 2 years. It's not what Newfoundgold did, but the thing about this is it only has $123 million market cap, as you can see, and its interest in Newfoundgold is probably worth triple that. So, and then you're getting everything else that they own for free. So this is an interesting way to play it because it's like a holding company that owns a bunch of Newfoundgold. And you can see it's traded 136,000 shares today. So some pretty good liquidity. So that's another way of looking at buying it. But Newfoundgold, just as full disclosure, it is a sponsor of Stock Chart Today. So today we looked at stock buybacks, the huge, long, lagging in 3M stock price, the issue I have with buybacks, why they don't work if there's no growth in a company, and it's poorly allocated money if they don't work, because instead of the company investing in new businesses, doing takeovers to maybe potentially acquire a new business, expand their business, investing in new technologies, new products, all you're doing is buy back stock. So anyhow, I'm gonna leave it at that. And the disclosure is Palisades is a sponsor of Stock Chart of the Day. I have no position in 3M. Everybody take care.